George Asante, Head of Trading in Africa at Barclays, sat down with Bridget to discuss the opportunities across asset classes on the African continent.
I think where I will actually group it into the first category, which obviously is South Africa. So South Africa, you can do anything that you want to do as a corporate. If you want to hedge yourself, you want to hedge your imports or your exports, it's very easy to do. Now, the great thing we are seeing is that over the past 5 years, we're actually seeing a couple of markets actually moving towards where South Africa is. And for me, that is a great achievement. So we can talk about the likes of Kenya, where, 5 years ago, you couldn't do simple big ticket transactions. You couldn't do 100 million transaction without moving the market. Today, you can actually do 100 million transaction without moving the market. And I think that is a big step forward. It's not just Kenya, it goes to the likes of Uganda, fantastic central bank, fantastic market participants. You can do transactions in multiples that you couldn't do 5 years ago, and for me that is progress. Yeah.
So that's exciting. And you're looking at, we're talking about East Africa specifically.
Yeah.
So what is Barclays' view in terms of the regional developments? I mean, what are the caveats? If we look at West Africa, what would you say would be the best opportunity and the biggest risk?
So I think if you look at from a regional point of view, if you look at East Africa, I think one thing that works for East Africa is that commonality of activities. So they are all bonded somehow by tourism. So there is a lot of movement across. So underlying transactions are actually happening briskly. And what that does is that at the bigger level, you will see banks also interacting, because on the underlying basis, people are interacting. So banks are now interacting. And the next stage will be governments and corporates also interacting.
Brilliant.
Which for me creates a regional opportunity rather than a country opportunity. So we see that a lot in East Africa. When you move to West Africa, it's not too much so. I mean, in West Africa, we have just about 2 countries that are very integrated.
What's that, Ghana and Nigeria?
Ghana and Nigeria,
okay,
who are not neighbors directly, but somehow there is a connection of corporate activity, retail activity, and it's moved to the government level. It even goes up to sports, etc. So that is really where that is where you see the opportunity in West Africa. Beyond that, you don't really see it. But East Africa for me is like a fantastic success story from a regional point.
Fantastic. So if we look going forward, your the pickup of activity, the pickup of the volumes, the type of transactions that you're doing, are you finding that that's picking up quite significantly? Or people got more appetite? And the last question I want to ask you is it coming from a domestic perspective, or are you seeing more international type flows?
So again, if you want to regionalize it, you go to East Africa, most of the big transactions or big corporates are actually owned by the domestic market. Okay, so most of the transactions are originated domestically and benefits the domestic people. If you move away from East Africa to West Africa, there is a bit of change where most of the big corporates in Ghana, for example, are actually owned by foreigners. And I think over time there is this whole move of localizing part of that business. I think that is good for sustainable growth, but we see again the benefits more on the East African corridor and probably on the Southern African corridor, because it's more owned by the domestic corporates and domestic individuals than foreigners.